10 years on and the world still feels the ripples of the Lehman collapse. The massive bailouts of private banks by taxpayers led to years of austerity in the West. This then triggered a social and political push to the extremes of right and left. So how did a small market in American subprime mortgages come to infect the global financial system? And given that experts didn't see it coming, can we trust that they will predict the next crash? In the summer of 2007, the French bank BNP Paribas announced problems with its US mortgage portfolio. It contained what were known as subprime securities. BNP was the canary in the coal mine. This new financial product contained loans that had been sliced up according to their level of risk. The products were then repackaged and sold on to investors who then sold them onto other investors. The aim was to spread the exposure. But when Americans started defaulting on their mortgages, nobody knew where the risk lay. The process of securitization had left European and American banks so intertwined that panic was highly contagious. Queues outside the UK lender Northern Rock were one of the first visible signs of alarm. The run on that bank forced it to be nationalized in early 2008. But the peak of the crisis was the collapse of Lehman Brothers in September 2008. Other banks became even more hesitant about lending to customers. Governments stepped in to reassure the markets and the public.
The American people can remain confident in the soundness and the resilience of our financial system.
They tried to restore public confidence by guaranteeing deposits, buying bank shares and lending them money, until money markets calmed down. One of the main lessons learned from the crisis is that the more capital banks have relative to their risks, the safer the economy as a whole becomes. And as a result, a new global regulatory system called the Third Basel Accord is being rolled out. Its aim is to increase bank liquidity and decrease banking risks. So, are the new Basel Accords on bank stress testing and capital enough to stave off the next crisis? And what if the next crisis is not lurking in the mortgage markets? Some experts point to a borrowing binge among risky companies and risky countries. It could be here that the next crisis lies in wait.